All right, what's going on, everybody? It is Wednesday, May 26th. Got my podcast episode up. Go to the link in the description and check it out. I give an in-depth coverage of my Grand Canyon hike, and I'm talking about the markets and some developments, fiscal stuff, maybe some fiscal problems ahead with the end of the enhanced unemployment benefits that starts next month, June 12th. A bunch of states, 23 states in all so far, have said that they're going to end the program early. Program is slated to end September 16th, but 23 states are pulling out because they think it is keeping people home and people are not working. We'll see. Look, I talk about this on the podcast. What you don't want to do is slow down or curtail or end net transfers from the government. That those are income transfers, and that's no good. I mean, that's what drives the economy. I mean, we could have this discussion back and forth about people working in jobs, but you need buying power for any business to run. I mean, businesses depend on consumers. They depend on sales, selling their products and services. People need buying power. Anyway, this is not what I want to talk about in this video. You know, it's been fun to watch how the inflation hysteria, the whole inflation meme conversation is starting to completely evaporate. Some of the die-hard inflationistas now switching over to the deflation camp. Today we had another really strong 2-year auction. Rates were down again. Look, I don't think, like I said before, I don't think we were going to have inflation, certainly not hyperinflation. You know, I did that video a couple of months back about that guy, the big short guy, Michael J. Burry, who was talking about hyperinflation. I mean, that was nonsense. You could go back and listen to the video I did at that time. I mean, for me, when I heard that back then, and I think I said this, it showed me that this guy, the big short, who supposedly made all his money selling subprime, he's a guy who's more lucky than smart. And maybe he's a physician, a doctor. I think he is. So, you know, he's smart in that aspect. He went to school. He got certified as a medical doctor. But when you start saying things like this, that, you know, we're going to have hyperinflation, I mean, you don't understand. I mean, the guy just doesn't understand. And a lot of these quacks and people, and not just the quacks, all right? We've had some serious Wall Street people, serious finance people talking about the same thing. I don't know, like, how many times do we have to run through the numbers where you can see that monetary growth, the monetary base, or the federal debt, which is essentially all the dollars printed, subtracting the taxes that were taken away. So all the dollars in existence, I mean, that has gone parabolic. We know it's gone from like virtually nothing back in Reagan days to 28 trillion now. And inflation just collapsed over that period of time. And yes, in the last year, we saw price increases in a fairly large number of areas in the economy, but those things are already starting to moderate. So now they're talking about deflation. Look, I don't think it's going to be either one. I mean, it's not going to be inflation, nor do I think we're going to have deflation. We could have a brief period where I talked about this yesterday, where because of the response on the part of businesses, on the part of producers who have been unable to meet demand because of pandemic-related factors, now starting to ramp up production to very high levels, we may see a brief period, maybe a few months, maybe 6 months, maybe less, where supply comes back on in a big way and prices come down. But you're not gonna, when you mention these terms, inflation, deflation, you can't talk about these things as one-off events, all right? If you have a supply shock, which we had in the pandemic, and it's a one-off event, and then things start to abate and those pressures start to dissipate, that's not inflation. And vice versa, on a deflation, if you have now an inverse, a reverse supply shock, where a lot of supply suddenly hits the market and prices come down to a new equilibrium level, that's not deflation either. That's a market adjustment to prior conditions that cause something, to be out of whack. A lot of times I talk about, what drives inflation. You got to have something broken in the system, or you have to have some monopolistic force. So we had something broken for a year. It was the pandemic, and that's what caused that. And now the response to that, and it may not even be what I'm saying, but I do believe that we can see this sort of reverse supply shock, where a lot of supply hits the market now as businesses come back on stream and ramp up and stuff like that, and we see prices come down. But that's not a deflation either. It's just an adjustment to a period where prices went too high and businesses were not able to produce. But it's fascinating to see. I mean, if you've been following it like me, and you read the comments and the stuff on the internet, the stuff online, and the commentary, it has shifted 180 degrees, right? And all of a sudden now they're like, well, I guess the Fed's not going to raise interest rates, even though the Fed was telling everybody that. And Powell's going to come out of this looking like a genius, because he was the one who said it's transitory, it's transitory. There were even other members of the FOMC, who were hinting at rate increases. That Powell looks like the smart guy here, because it's going to end up to be a temporary thing, transitory, just like he said. So that's where we are. Conditions, you got to stay focused. One thing I talk about in the podcast today with respect to my experience in that Grand Canyon hike was at the end, and I may have mentioned this yesterday, I don't know, but if you listen to the podcast, you'll hear me talk about it. At the end, when I was completely physically exhausted, and when, the top of the canyon rim still seemed so far away. I had hours left to go after I had already walked like 12 hours, and I was looking up at the canyon rim, and it was just so far away that, looking at that, if I were to focus on that, I mean, it would shut me down physically. I mean, literally, I would want to just lay down and stop walking. So I really had to narrow my focus. It had to become like a singular focus on one thing, which was just like putting one foot in front of another. Don't think about the time left. Don't think about the top, the rim of the canyon. Just like one foot in front of another. Just like you got to narrow it way down to, the basic thing that you have to do next. So the reason I'm saying this is because, for me, it always comes back to the fiscal flows. I look at those numbers every single day. I have that every single day. And there's a lot of noise outside of that. And there's a lot of things that can derail you. So many things. I mean, if you read the financial news, if you watch these stupid business shows, commentary, online, blogs, this and that, if you stare at the markets moving up and down and all over the place, so many things can trip you up. You got to have that singular focus. And the most important thing, the underlying macroeconomic fundamental, the thing, the base thing, are those fiscal flows. And I come back to that. And that guides me. That keeps me on track. Just like when I had to think about just putting one foot in front of the other when I was walking up that canyon. Because if I looked at the rim or if I looked at my watch, forget it. I'd still be there right now. So same mentality applies. All right? And so having said that, things are still good. Things are still positive. But I will reiterate that starting next month, got to keep a really sharp eye on those numbers, because when these states start ending that income transfer, I don't know, maybe that could be a problem. Anyway, check out my podcast. The link is in the description below. Please like and subscribe to this channel, and see everybody tomorrow. Bye.